right, everybody, welcome back for another deep dive. And today we're tackling something that a lot of folks find a little bit intimidating, to say the least, taxes.
Yeah,
But specifically, we're going to be looking at tax deductions and credits because they can be a little bit of a mystery, and we want to make sure that you're getting all the breaks that you can. So
okay,
it's
right.
going to kind of like a treasure hunt we'll be going through,
That's a great way to put it.
and we might even find some hidden treasures, some things that maybe you didn't know you could deduct or get credits for, like, we all know about the mortgage interest deduction.
Right.
But did you know that you could get a deduction for student loan interest or even a credit for being energy efficient? There's all sorts of interesting things
Absolutely.
that are tucked away in the tax code. So
Yeah, and so many people just don't even realize these things exist and they're leaving money on the table.
exactly.
It's about empowering yourself with that knowledge
Right.
so you can make the system work for you.
Okay, so let's start with the basics. Can you just break down the fundamental difference between deductions and credits?
Sure. So basically, a deduction reduces your taxable income.
Okay.
So let's say you make $50,000 and you have a $5,000 deduction. You're only going to be taxed on $45,000.
Okay, so that's like a discount on the amount of income that the government can tax.
Exactly.
Gotcha.
And then a credit actually directly reduces your tax liability.
Mm-hmm.
So let's say your tax bill is $3,000. You have a $1,000 credit. Your new tax bill is $2,000.
So that's like a coupon you can apply at the register
Pretty much.
to your final bill.
Yeah.
Gotcha.
Okay.
And then, we also talk about refundable versus non-refundable credits.
Right. And this is always a little bit confusing for me. So
Sure.
yeah.
So a non-refundable credit, it can reduce your tax liability all the way down to zero, but no further.
Okay.
Whereas refundable credit can actually give you money back.
So even if you don't owe any taxes,
Exactly.
you could get a check.
Yep.
Wow, that's a hidden gem right there.
It is.
Okay, so let's talk about deductions. And I guess we should probably start with the standard deduction because that seems to be the one that people talk about the most.
Right. So the standard deduction, it's a fixed amount that everyone gets unless they choose to itemize.
Cool.
And for 2024, it's $13,850 if you're single, $27,700 for married filing jointly, and $20,800 for head of household.
So that's like the default discount that everybody gets. But when would it make sense for somebody to itemize instead?
So it makes sense to itemize if you have a lot of deductions, and those deductions add up to more than the standard deduction.
Oh,
So,
right.
for example, homeowners, they might want to itemize because they can take advantage of the mortgage interest deduction.
Right, and that can be a big one, especially with interest rates being as high as they are right now.
Exactly. So that could be a significant savings for homeowners. Now, what about renters? Are there any deductions that they should be aware of that might be particularly helpful for them?
Yeah, renters might want to look into the state and local tax deduction,
Okay.
or SALT.
Sold. Okay.
And that allows you to deduct up to $10,000 in state and local income sales and property taxes.
So if you live in a high tax area, that could really help you out.
Absolutely.
Okay. What about charitable donations? A lot of folks are very generous and they like to give back to their communities. Are there any tax benefits to doing that?
Absolutely. So you can deduct donations of cash goods and even mileage for volunteer work.
Really? So if you're driving around doing all sorts of good deeds for people, you can actually
You can deduct the mileage.
deduct the mileage. That's fantastic. Okay, and I know this is really important, but you've got to keep good records, right?
You have to keep those receipts.
Right.
It's so important.
Receipts.
Exactly.
Okay. Speaking of receipts, what about medical expenses? Because that can be another big one for people, especially if they have a major medical event or,
Yeah.
you know.
You can deduct unreimbursed medical expenses that exceed 7.5% of your adjusted gross income.
Wait a minute. Now you're throwing out acronyms on me. AGI. What's that?
Good catch.
Yeah.
So AGI, it stands for adjusted gross income.
Okay.
And basically it's your total income minus certain deductions like contributions to a traditional IRA or student loan interest.
Okay.
So it's kind of like your income after some initial adjustments.
Got it. So to clarify, I can only deduct the medical expenses if they're more than 7.5% of that adjusted number.
Exactly.
Okay.
So this deduction is usually more helpful for folks who have had some big medical bills or have ongoing medical costs.
Right. Okay. That makes sense. And speaking of large expenses, what about student loans? Because those payments can really add up,
Yeah,
especially for recent grads and...
absolutely. So there's good news for folks with student loans.
Oh.
You can deduct up to $2,500 in student loan interest that you paid during the year.
Okay.
And here's the best part. You don't even have to itemize to claim this deduction.
That is a great benefit for recent grads. So even if you're just taking the standard deduction, you can still get a break for
Exactly.
your student loan interest.
Yep.
That's fantastic. Okay, so we're starting to see that there are some deductions that are available even if you don't itemize, which is great for people who just want to keep things simple.
Exactly.
Okay, so we've covered some really great deductions, but now let's shift gears and talk about retirement planning because that's something that everyone should be thinking about regardless of their age.
Absolutely.
And I'm sure there are some tax benefits there as
Well,
well.
there are for sure.
So can you tell us about those?
So contributions to retirement accounts like 401ks
Yeah.
and traditional IRAs, those are tax deductibles,
Okay.
which means you can lower your taxable income now while you're saving for retirement.
So you're getting a double benefit there. You're saving for your future and
Exactly.
you're reducing your taxes.
It's a win-win.
I like it. And what are the contribution limits for 2024?
So for a 1K, it's $23,000.
Okay.
And for a traditional IRA, it's $7,000.
Okay, that's good to know. And before we move on to credits, I do want to touch on something that I know is relevant to a lot of our listeners. A lot of folks are freelancers or entrepreneurs or small business owners these days. And I'm wondering if there are any specific deductions that they should be aware of that might be particularly helpful for them.
Absolutely. One of the big ones for self-employed individuals is the self-employed health insurance deduction.
Okay.
So this lets you deduct the cost of health insurance premiums for yourself, your spouse, and your dependents.
That's huge because healthcare costs can be a major burden for self-employed people.
Right.
So that's a fantastic deduction for them. Okay. So we've covered some really awesome deductions. I feel like we've already uncovered some hidden gems.
Yeah.
But now hold on to your hats, folks, because we're about to enter the thrilling world of tax credits. And these, as we've learned, can be even more powerful than deductions.
Absolutely.
So get ready to boost those refunds. Okay, so let's dive into these credits now. I know you said that there are some that could benefit a lot of people, like maybe across the board.
Absolutely.
So let's start with those.
Okay, so one of the most powerful credits, and it's specifically designed to help working families, is the Earned Income Tax Credit, or the EITC.
Oh, yeah, the EITC.
Yep, and this is for low to moderate income workers, particularly those with children.
And this is the one, right, where you can actually get money back even if you don't owe any taxes.
Exactly. It's a refundable credit.
Okay, refundable. So it's like a bonus
Pretty much.
from the government.
And actually, in 2024, families with 3 or more qualifying children could receive up to $7,430 back.
Wow, that's a significant amount of money, especially for families that are, maybe struggling to make ends meet. That could be a real game changer. Okay, so we've got the EITC. What about for families with younger kids? Is there anything specifically for them?
Yeah, so the child tax credit is a big one,
Okay.
and that offers up to $2,000 per qualifying child under 17.
Okay.
And like the EITC, a portion of it is refundable. So in 2024, you can get up to $1,600 back per child, even if you owe 0 taxes.
Wow, so that's two really big wins for families, especially those with lower incomes.
Absolutely.
Okay, now let's shift gears a little bit and talk about education. Whether it's for yourself or for your kids, education can be a major expense.
Right.
So I'm guessing there are some credits that can help with that.
Yeah, definitely. So for students who are pursuing higher education, there's the American Opportunity Tax Credit.
Okay, the American Opportunity Tax Credit.
Yes, and that one is awesome for helping to cover the costs of the first 4 years of college.
Okay, so for those early college years.
Exactly.
Okay, and it provides up to $2,500 per year per eligible student.
That's right.
Okay, that's a nice chunk of change.
It is.
Now, is that one also refundable?
It is partially refundable, so you can get up to $1,000 back, even if you don't owe any taxes.
Okay, so it can actually help offset the cost of those first 4 years.
Exactly.
Okay, great. But what about for people who are pursuing education beyond those first 4 years? Maybe they're going to grad school or some kind of professional development program.
Yep, there's a credit for that too. It's called the Lifetime Learning Credit.
Okay.
Lifetime Learning. And that one offers up to $2,000 per year for qualified tuition and related expenses, and it's for undergraduate, graduate, or professional degree programs.
Okay, so it's a little bit more flexible
It is.
in terms of what it covers, but is there any kind of a catch with that one?
The only catch is that it's not refundable.
Okay.
So it can only reduce your tax liability down to 0.
Right. Okay, so you can't get money back, but hey, $2,000 is $2,000.
Exactly.
That's still a great savings. Okay, so we've talked about credits for families, credits for students. What about people who are thinking about their long-term financial future? Saving for retirement. Are there any credits that can help boost those efforts?
Absolutely. So for those folks who are diligently putting money away for their golden years, there's the Savers Credit,
Okay, the Savers Credit.
which is designed to incentivize retirement savings.
I love that anything that helps people save for retirement is a good thing in my book.
I agree.
Okay, so how does this Savers Credit work?
Okay, so it offers a tax credit of up to 50% of your contributions to a traditional or Roth IRA or 401k,
Okay.
and the maximum credit is $1,000 for single filers or $2,000 for married couples.
So it's basically like a bonus from the government for being responsible and planning for your future. I love it. Okay, so we've got families, we've got students, we've got retirement savers. Um, Now I'm curious about this because, I'm trying to make more environmentally friendly choices in my own life. Are there any tax benefits to being eco-conscious?
There are.
Okay, tell me more.
So if you're thinking about making energy efficient improvements to your home, there is a credit called the Residential Energy Efficient Property Credit,
Okay.
and that covers a whopping 30% of the cost of qualifying improvements.
Wow, 30%.
30%.
And what kind of improvements are we talking about?
So things like solar panels, geothermal, heat pumps, wind turbines.
Wow, so you could really save a lot of money by making those kinds of upgrades.
You could, and there's no upper limit on that credit.
Really? 30%? No upper limit? That's amazing.
This is a really good one.
Okay, what about electric vehicles? Because with gas prices these days, I'm seriously considering making the switch myself.
Well, you're in luck because there's also a tax credit for electric vehicles. It's
Hmm.
called the Electric Vehicle Tax Credit. And you can get up to $7,500 back when you purchase a qualifying electric or plug-in hybrid vehicle.
$7,500. That's incredible.
It is.
Okay, so we've got credits for families, students, retirement savers, eco-conscious folks, EV enthusiasts. It seems like there's something for everyone.
There really is.
But I have to admit, with all these deductions and credits, it's kind of overwhelming. Where do we even start with all this information?
Yeah, it's a lot to take in.
It is. But don't worry, we're here to help you sort through it all.
Okay, good. Because I need all the help I can get.
So the first thing you need to do is figure out whether you're better off taking the standard deduction or itemizing.
Okay, so we shouldn't just automatically assume that one is better than the other.
Exactly. You need to actually sit down and do the math and see which one is going to give you a bigger advantage.
Okay, so sometimes the simplest option isn't always the best.
Right. And here's a really important tip. Keep really good records
Okay.
of all your expenses.
Those receipts for charitable donations, medical expenses, education, cost anything that could be deductible. Hang on to those.
So basically, if it might be deductible, save the receipt.
Exactly.
Okay.
It's always better to be safe than sorry,
Especially if you get audited.
especially if you get audited.
Right. Nobody wants that.
No, and look, I know this can be a lot to handle, so if you're feeling overwhelmed, don't be afraid to get some help.
Yeah.
Tax software can be a great resource for identifying deductions and credits that you might have missed.
Go.
And if you have a more complicated situation, a qualified tax professional can be really invaluable.
So it's like having a financial expert in your corner to help you navigate the tax maze.
Exactly. They can help you maximize your savings and make sure you're doing everything by the book.
Okay, so tax software for the do-it-yourselfers and a tax pro if you need a little extra hand-holding.
Exactly. And remember, this isn't just about filing your taxes once a year.
Right.
It's about making strategic tax planning an ongoing process.
Okay, so we should be thinking about these deductions and credits throughout the year,
Yes, absolutely.
not just when tax season rolls around.
Right. So if you're planning a major purchase like a house or an electric vehicle, factor in those potential tax benefits.
Okay.
Same goes for education expenses or retirement contributions. Timing those strategically can make a big difference.
That's a great point. I hadn't really thought about it that way before, so this has been incredibly insightful. I feel like I've learned so much.
I'm glad to hear that.
So just to kind of wrap things up, what are some of the key takeaways that you want our listeners to remember?
Well, first and foremost, I hope everyone now understands the difference between deductions and credits.
Right. Deductions reduce your taxable income credits, reduce your tax bill.
Exactly. And remember, when it comes to credits, the refundable ones are the real MVPs.
Yeah, those are the ones that can put money back in your pocket.
That's right. And I also want to emphasize that it's so important to explore all the potential deductions and credits that are available to you.
Don't leave money on the table. Yeah.
Exactly. Take advantage of those resources, like tax software or tax professional.
Okay.
But most importantly, I hope you realize that this knowledge is empowering.
It's about taking control of your finances and making informed decisions.
Exactly. Understanding these tax tools allows you to plan for the future and ultimately keep more of your hard-earned money.
Well said. Well said. A huge thanks to you for shedding light on this often confusing topic. I feel so much more confident about navigating the world of deductions and credits
Oh,
now.
you're very welcome. I'm glad I could help.
And listeners, don't forget to check out the show notes for links to all the resources that we mentioned today. And until next time, happy tax saving adventures.